Welcome to Markets Now. I'm Rochelle Rook along with Kent Beadle Paradigm Futures. We are seeing a little bit higher openings this morning, kind of continue a little bit after the opening, except for the cattle market. And let's talk, Kent, about the fact that it has been a pretty quiet week in the grain so far. The market seems like it's searching for some direction.
Well, it is. And part of the problem is that last week and then early this week, you ended up running back up against some fairly significant resistance levels. As is typically the case in February, you print a new high for a move and you get a little bit of farmer selling. You get a little profit taking from speculative position that even though we can't see it, we know that the funds are long. And we end up getting some back and fill. And I think that's healthy for a market. We've had that going on pretty much all week. We've done this really consecutively. We did it last week. We did it the week before. We go down and test the 670 area in the March corn or the 15 to 1520 area in March soybeans. And then we find some good support. And the market runs back up into the resistance areas again, where it finds that selling. And it's just kind of winter doldrums that we're trading right now, not really going anywhere, waiting for new fundamentals, which obviously we're going to get at the end of next week at the Outlook conference.
Yeah, how much stock are we going to put into what USDA comes out with for those baseline projections for especially acreage? I know there's a lot of Twitter chatter about higher corn, maybe less beans.
Yeah, well, the first thing you have to remember is that there's generally a pretty good twinge of optimism that the USDA gives us in that report. In other words, what I mean by that is that it takes the acreage mix as they understand it and apportions it all out.
Sure.
Doesn't account for PP, and then obviously on the yield side, it uses its trend lines, and of course, today trend lines typically mean record, right? So you have to have a very good year in order to achieve what these optimistic forecasts are going to say. Marketplace tends to take them at face value, like this is the truth, and they're often construed a little bit bearishly because they always mean an increase in ending stocks over where the marketplace happens to be at the time. And so that's another reason why we probably can't get any traction here at the moment is we know that this report for 2023, 2024 is coming at us at the end of next week.
Yeah. The other thing the market is searching for is some clarity on South America. Obviously, we've got harvest going on in Brazil, but we're still seemingly having some questions about what's going on in Argentina, except we did get a pretty good drop in crop ratings yesterday in Argentina on soybeans, but especially corn.
Yeah, we're hearing that the Buenos Aires exchange is likely to come through with another reduction in the size of those crops. Clearly, this is going to mean that some of the excess that's coming out of Brazil is going to have to go into Argentina, especially to keep crush plants going in that part of the world. And it likely is going to mean less corn exports out of Argentina as well, which ultimately could benefit the U.S. Obviously, safrinha production in Brazil is still in front of us right now. And the one issue that we have to keep an eye on there is just how quickly is that soybean crop in Brazil getting harvested. We know that the yields are big when they're able to get in and get after it, but we also know that they're behind. I was just looking at the 1 to 5 day for Mato Grosso. It looks like another 1.5 to 2 inches of rain. I'm not confident that harvest is going to progress as quickly as they might like, or that the safrinha crop is going to get planted as quickly as we might have anticipated. And therefore, you have to ask yourself what kind of yields is the safrinha crop actually going to have this year. So there's a lot of things still in front of us with South America and a lot of unknowns that we still don't have the answer to yet.
Yeah, but seemingly it's a little supportive, at least this morning, for corn, soybeans, and meal. And the other thing I need to ask you is, we've got outside markets pretty negative this morning. The dollar's up sharply. You've got crude oil down sharply. Honestly, the grains are holding up pretty good here in light of that. But will that be the way that we trade as we go through the day here today? Can we maintain this?
Well, if crude oil wants to keep moving lower and decides to break support, that's it's going to be a tough pull for the corn market to maintain a higher trade if that actually happens. We've actually seen kind of a range trade in energies as well, where we rally up. We've been trading as high as $80, $82, and then we go back down and trade around close to 70. So, the one thing I've been watching is Nat Gas. Nat Gas overnight threatening to break out of the bottom of some of its support. And of course, that has longer term implications for the value of fertilizer, which obviously has been coming down fairly significantly over the course of the winter. But some of these macro things are things that could be construed longer term bearish. They don't necessarily turn our tight balance sheets more. They don't give us a larger ending stock anytime soon, and so there's only so far that you can go down off of weak outside markets.
You bet. And as far as the wheat market, obviously we've had a little bit of moisture in some of those HRW areas, but the market hasn't really sold off. Is it, I guess, concerned here about the grain export deal, the Black Sea deal, as we start some of these talks next week?
Yeah, that is kicking off. The Russians have obviously been making noise that they want some changes. All parties would like it to work better. The thing about the export corridor itself is that you just have to ask yourself, how long is it going to be able to maintain and be open if we start having a more significant offensive in the Ukraine once again? And everybody is pointing to April or May when the ground firms up that there's going to be a very heavy amount of fighting here again.
Yeah.
Some analysts are pointing toward the idea that Russia's, if they do what they've done previously, they pretty much destroy everything that not just moves or is alive, but everything that is standing. And if that ends up meeting export facilities along the Black Sea, obviously we're going to put that program to an end.
Yeah. Cattle market, we're still looking like we're consolidating, even though we've had some positive news here this week that should be supportive.
Yeah, I think so. Cash trade is, leaning a little bit better. But, we'd had a really big rally a couple of weeks ago, and it just feels like the market isn't done consolidating those gains yet. You start moving up toward the highs. I've been watching June cattle and August cattle for my hedgers, and you get up above 160, and people are doing the math against corn costs and seeing some margin there, and they're doing some hedging at that 160 number, and so we just have a hard time getting another leg going. Keep in mind we have a cattle on feed report next Friday, and the market is going to be looking for a continuation of the supportive on feed fundamentals that it had a couple weeks ago. And how we tend to trade those things is we like to price in the results and then once again kind of reverse and back and fill and take profits on what people anticipate. So it may take us a little bit of time here yet before we make new highs in the cattle.
All right. Thanks so much for joining us, Ken Beadle with Paradigm Futures, and that's Markets Now.